The spot price of iron ore hit a 2-year high today and has now gone up 40% in 6 months, defying expectations based on the weakness of the Chinese economy. And this is also a key reason the federal budget is looking so good in today's MyIFO. This chart shows the iron ore price and the budget forecast for it going back to 2015. Now, in that year, the forecast was $48 US a tonne, which turned out to be correct. And then after that, it was $55 in every budget for 7 years, which was basically correct in the first few of those years. But by 2019, the forecast was wrong. And in 2021, it was wildly wrong. In May this year, it was bumped up to $60, and that was repeated in today's MyIFO statement. Still wrong. And investment bank UBS today predicted that the price would stay above $100 for 2 years. So iron ore could be the gift that keeps giving. But because Treasury is assuming that iron ore will fall to $60, it also must assume the budget will go back into deficit next year and stay there. But that'll also be wrong, just like the deficit forecast in May this year. And the other reason the budget will go back into deficit is that the interest rate on its debt has gone from less than 1% 3 years ago to 4.5% now. And interest is now the government's fastest growing expense. And note that the growth rate of the cost of the NDIS is budgeted to fall only a little bit after last week's changes. The rising iron ore price boosted mining stocks and the share market today, and Sigma Healthcare returned to a 36% round of applause for the Chemist Warehouse deal. Stocks on Wall Street went up after US inflation fell again and the Aussie dollar slipped to 65.5 US cents. And that's finance. Thanks for watching. You can check out more finance news by clicking there, and don't forget to click subscribe down there to get all the latest updates from ABC News.